Let's kick things off with a nice juicy roasting of financial regulators by Senator John Kennedy, shall we?
Gentlemen, I think Senator Warren pointed out that you are major financial regulators, and we thank you for your time today. So let me ask you your opinion. Would any single one of you hire Sam Brinkman-Fried to manage a food truck? Would any single one of you hire his girlfriend, Caroline Ellison, who apparently was trading billions of dollars, to manage a food truck? Who in our federal financial services regulatory administrative state was watching FTX to make sure that no one there stole people's money? Was anyone watching them that you know of?
Well, Senator, just from you're dealing with banking.
You're a brave man.
I understand. Regulators, and FTX was not engaged in the banking business or in credit union business.
I know. I'm not saying you should be. I'm just asking.
Yeah.
You guys are at the top of the food chain in terms of financial services regulation. Do you know who was watching? Who was watching these chuckleheads?
Well, these folks, I think, were engaging generally in investment and trading activity. And so in the first instance, if you're thinking about
looks to me like some of them were engaged in stealing.
Well, that's under investigation now, Senator. So I think in the first instance, you'd probably want to engage with the market regulator.
Nice. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. Be sure to check out our sponsors, Ledger, Unstoppable Domains, and Masterworks. Get your crypto off of exchanges and onto cold storage hardware wallets from Ledger. Secure your unique human-readable crypto wallet name like Casey.wallet with Unstoppable Domains, and more on Masterworks in a bit. Awesome. Let's hit Crypto This Week. Savage Finn Henrik tweets, by middle of next year, with inflation data having collapsed, the Fed will realize late again that they have over-tightened, and then they'll end up panic-cutting rates as usual, as the economic fallout will be self-evident into the second half. Bets are already being placed on precisely that outcome. And he references a headline that reads, Trader bets millions on a massive pivot by the Fed, expects 2% rate by mid-2023. So looking back at the past few years, both the traditional financial markets and crypto markets turned bullish at a precise moment and bearish at a precise moment. And it was all predicated on the Fed's turning the money printers on and off, as well as starting interest rate hikes. It is likely we see the Fed pivot, but only after some things, or potentially pretty much everything, breaks down. Which is why my random wild guess is that there is still more pain to come, and in crypto especially, more downward price action with the FTX contagion in full effect. However, when the pivot happens, the switch from bear to bull could be a lot quicker than most people think, which is why until then, dollar cost averaging into positions over time is a superior strategy as crypto investors. The macroeconomic environment is certainly in flux, and we will likely see a lot of changes in the marketplaces over the next few months and years. I've been getting a lot of requests to discuss other types of investments to diversify into for building a strong, resilient, long-term portfolio to increase our wealth, which is why I've partnered with Masterworks. Masterworks is the first platform for buying and selling shares representing an investment in iconic artworks. So we can build a diversified portfolio of art curated by their industry-leading research team. Their recent results have generated an average net return of about 29% to their investors, which is great during this brutal bear market. As calculated by the Masterworks All Art Index, contemporary art prices have outpaced the S&P 500 by 131% from 1995 to 2021. In fact, Masterworks has had to acquire and release more art on the platform to meet demand, which is why there is a waitlist to join. However, we can skip the waitlist line by scrolling down and using the link in the description area below. Masterworks' research team uses proprietary data to determine which artist markets have the most momentum. Then their acquisitions team locates what they believe to be a good piece at a fair price, and they purchase the work. After that, they securitize the art by filing an offering circular with the Securities and Exchange Commission, allowing anyone to invest. And finally, they hold the artwork for about 3 to 10 years until they sell the painting to receive your pro rata proceeds after their fees. Or you also have the option to seek to sell your shares on their secondary market, which is currently only available to US citizens with US bank accounts at this time. So if you've got cash on the sidelines burning a hole in your pocket, use the link below to skip the waitlist and diversify into art. Cool. So is it possible for the FTX contagion to spread outside of just crypto? Could the FTX collapse hurt the financial markets as a whole? According to Citadel CEO Ken Griffin, recent developments in the crypto space could shake confidence in the financial markets in general. Yes, and even before the collapse of FTX, our confidence in the financial markets in general should have been shooketh. Because, as we've been discussing over the past few months, big banks don't have any liquidity. Fundrise CEO warns of impending national liquidity crisis. Ben Miller, who oversees the real estate crowdfunding platform Fundrise, believes that the U.S. economy is headed for a potentially catastrophic liquidity crisis. Banks making real estate loans cannot cover interest rates that have doubled, he said. The natural instinct is to look at the borrower as a source of defaults. But there are circumstances where the borrower doesn't default. But intermediary lenders who have taken the loans and levered them up and up will eventually default, Miller said. Miller also believes that lenders who borrow against their loans won't be able to withstand skyrocketing interest rates and will be especially susceptible to liquidity issues. Yikes. And while some banks are fretting over liquidity, other US banks launch a digital dollar blockchain pilot. Mainstream financial institutions are working with the Federal Reserve to test a digital currency platform. However, as we've explored on the channel, it's possible that with the Fed's actions, deglobalization from geopolitical turmoil, and other macro factors, that the US has a hard time maintaining hegemony of the US dollar as the world's reserve currency. And here's a nice commentary on why the world needs more reserve currencies. The mighty dollar shows some signs of flagging amid hope the Fed's hikes will end soon, but resentment still abounds. With the world's reserve currency still nearly 12% stronger than a basket of its major counterparts since last spring, the questions are hard to avoid. Why should America force its monetary policy on everyone else? Wouldn't the world be better with more than just one dominant currency? The short answers are no it shouldn't, and yes it would. A world in which reserve assets were more diversified would certainly be a better place. Not least because it would mean that democratic institutions and open capital markets had somehow managed to flourish across the global economy. But in light of current political trends that seem to bolster autocrats, that day is not coming soon, and we are likely stuck with dollar dominance for a very long time. And he's probably right. We will have dollar dominance for the foreseeable future, but it will be interesting to see what happens when the US tries to force the entire world to use their central bank digital currency, as it will be a pretty hard sell. Alright, let's go over the current status of the FTX contagion effects. Bitcoin scarcity rises as bad exchanges take 1.2 million Bitcoin out of circulation over the years. Historical data around crypto crashes revealed that 14 crypto exchanges together were responsible for the loss of at least 1.195 million Bitcoin, representing 6.3% of the 19.2 million Bitcoin currently in circulation. And as we all probably know at this point, there is a finite number of Bitcoin. So once we reach the 21 million limit, no more Bitcoin can be created. So as the supply of Bitcoin decreases from things like bad exchanges, so long as demand stays the same, or more likely increases over time, this is bullish for the price of Bitcoin in the long run. So make sure we are protecting our investments from bad exchanges by using exchanges only to exchange fiat to crypto, crypto to crypto, and promptly transferring to our own cold storage hardware wallets like Ledger devices. And make sure we are not using exchanges as banks or places to store crypto for the long term. Because even after FTX, crypto exchanges struggle to convince customers they're safe. Exchange token reserves fall in the wake of FTX's sudden collapse. Binance and Crypto.com are among venues seeking to assuage concerns. And speaking of Binance just moved $2 billion worth of Bitcoin from its proof of reserves. What's going on? Ki Young Ju, CEO of CryptoQuant, points out on Twitter that since no announcement has been made from Binance, it means that it's either customers or investors' money. I think this activity was highly likely from customers who are in urgent situations. And there are certainly more urgent situations popping up everywhere following the FTX fiasco, as crypto lender Genesis is on the chopping block as Contagion continues. Genesis needs a $1 billion liquidity injection by Monday, and Gemini sees significant Bitcoin outflows as fears of insolvency spread throughout the industry. If you don't know about Genesis Trading, perhaps you should. They represent the backbone infrastructure of the institutional investor base in the Bitcoin and broader crypto markets. For lending, trading, hedging, exchange yields, and more, Genesis Trading was the brokerage to facilitate all of this activity in the space. Remember those juicy yields from the BlockFi and Gemini Earn products in the space? Genesis is the middleman between those platforms and hedge funds to generate that yield. Okay, so this particular domino falling, Genesis Trading, would be a very, very bad, hard, catastrophic event for the crypto markets. They are extremely, inextricably intertwined throughout the crypto space, and are the parent company of entities like Grayscale. And the other day, Grayscale cited security concerns for withholding on-chain proof of reserves. Grayscale shared a letter from Coinbase custody attesting that each of Grayscale's crypto products is fully backed, but stopped short of providing the wallet addresses. I mean, can we even trust what anyone says anymore when it comes to assuring everyone everything is fine? What are they gonna say? No, things are not okay and cause a bank run and ultimately their own demise? No, they're going to lie as long as they can. So at the end of the day, if your crypto is anywhere except for a wallet of which you completely own and control the keys, your crypto is not safe. And if you need help setting up a simple, easy to use wallet on your phone until your hardware wallet arrives, you can check out my video guide on how to do it step by step by clicking on the link above. Alright, so not many bullish news stories from the week. Just this one interesting story. Are Ethereum and Cardano NFTs coming to the PlayStation? Sony files new groundbreaking patent. Sony's patent hints about a system wherein players can trade unique in-game assets that are verified for authenticity over the blockchain network. If NFTs become mainstream in the future, it would put Sony in a major position of advantage to push its growth forward. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like the video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So, how many more dominoes will fall from the FTX fiasco? Will Genesis get the $1 billion they need by tomorrow? Have you gotten all of your crypto off of exchanges yet? Let me know in the comments below. Be safe out there.